Do you want to know how to trade with supply and demand? Then watch the video till the end. So, what does supply and demand zone imply? Supply and demand zones are at the heart of supply and demand trading. Hi friends, Chitra here. Welcome to my YouTube channel. In this video, we are going to discuss about what is supply and demand. So what is basically supply and demand? Supply is nothing but the resistance zone and demand is the support zone. So what is called supply? Supply is the total amount of goods or service available for the consumption, and demand means demand is the desire customers have for the goods or service. Supply and demand have the big impact on the prices of the product. We can see that with an example. Take an example of the orange. See, there are few oranges in the shop, but many people are waiting to purchase. That is very less supply, but demand is more. Means what is the meaning is the demand is high than the supply. So what the orange producer will do, he will increase the price of the orange because supply is very less but the demand for the orange is more. So the shopkeeper will increase the price of the orange. What will happen if there are more supply than the demand? In that case, the price of the orange will reduce. So this is how supply and demand will work in the market. So what does supply and demand zone imply? Supply and demand zones are at the heart of supply and demand trading. These zones are the areas that shows the liquidity of the specific price. The supply zone is called the distribution zone and the demand zone is called the accumulation zone. What is importance of supply and demand zones? Okay, the supply and demand zones are responsible for driving the markets, which we need to understand. Trading supply and demand zone help the investors to make any purchase or the sale decisions. When the price of the stock stops falling beyond the specific level and begins to move sideways for a stretch of time. What does this mean? This means that stock is seeing accumulation and after the accumulation the price could move up. Okay. The distribution zone is at the point which the price drops begins and starts the downward movement. Now we can see how can we use the supply and resistance zone, that is a supply and the demand zone for our trading. Okay, so this is the supply zone or called as resistance zone and this is the demand or the support zone. So if the price is closing below the supply zone, here is the place where we have to look for selling opportunities. Okay, so after that when the price touches the support zone, so from here the buyers, there will be huge buying zone. This is the place where the buyers, where the biggies will do buying here. So this is the place where we have to look for buying opportunities. So when the price is closing above the, when any green candle is closing above the support zone, here we can look for buying opportunities. See, when the price touched the support zone and after that we can see there is a huge rally in the market, and once the price touches the resistance zone, after that price was in the accumulation for some time and after that price started falling and after that again price retraced to resistance zone and again price started falling to the support zone. Once again when the price touched the demand zone, we can see there is a huge rally in the market. So this is how support and resistance will play a key role in the market. So as a pro trader, we have to understand how to trade with the support and the resistance zones. This is the supply and demand zone that I have marked for the Bank Nifty. Here the price is at the supply zone and once the price broke the supply zone, we can see that there is a huge fall in the market. And after that what happens? The price came and touched below the support zone. And after that we can see when the price moved from the support zone, that is we got a green candle and after that price moved away and went to the resistance zone. So the price was in the consolidation phase for quite some time and we can see here again the price was at the resistance zone. Why this is called resistance zone means again we can see there is a huge fall in the market. So this is called again the supply zone and price went to the demand zone. Price touched the support here. We can see once the price touched the demand zone or the support zone, there is a huge buying. The buyers will be buying. Buyers will buy in the huge quantity. And once the price touched the demand zone, we can see there is a huge rally in the market, that is upside movement. and after that price touched the supply zone, that is the resistance. Then here we can see that supply turns to demand zone. Why supply turns to demand zone? Because supply zone usually we can see that there is a huge selling. Here when the price is moving above the supply zone, that supply zone turns to a demand zone. Okay. The chart above you can see the demand zone, that is the broad support level, and the supply zone, that is the broad area of resistance. This is the chart we are discussing about. We want to find out the price zones where the supply overwhelms demands and the demand overwhelms the supply. The former is known as the supply zone. When the market bumps into the supply zone, price will drop. So how can we make money in the market? By shorting the market. Here, when the price is coming from the supply zone, that is price is breaking the supply zone, we have to do shorting in the market. The later in the market, that is the demand zone. With the support of demand, the price will rise. Then you can find in the long position, you can find profit by going long in the trades. Here, when the price is going from the demand zone, you can take long positions. If the supply zone is broken, it becomes demand zone. Pullback test from the demand zone, you can go long. Now we can see when the price is in the downtrend, that is price is continuously falling, how the supply and demand zone will work. Here you can see the price is falling down, and after the price touched the supply zone, you can see that there is a consolidation of the price. This is the base. Okay, here this is the supply zone, and when we can see once the price broke the supply zone, again there is a drop in the price. This is the continuation of the downtrend. If the price is going above, we can see that the supply zone will turns into a demand zone. But here what happened? Price broke the supply zone and there is a drop in the price. So we can see that there is a continuous downfall in the market. And after that what happened? Price dropped, and again after this price went for retracement. So here is the place you have to look for entry for selling opportunities. Okay, after the retracement you have to look for entry for selling. Why? There is a here you can see that the price is in the sideways, that is a consolidation, because there is very less volume in the market. When the volume is more, we can see there is a heavy fall in the market. So price will drop down with the volume. Price will drop only with the heavy volume, huge volume. This is the picture of the continuous trend continuous base, that is the rally in the market. This is for the downfall, this is a continuous rally. So here from the support, that is from the demand zone, price is going up. And you can see the price is in the consolidation phase because there is very less volume in the market. Only the price will break up only with the volume. So here we can see there is a huge volume, and also the price is breaking the demand zone. So one can enter into the long trade only after the retracement. You can see after that the price retraced at the demand zone, and here is the place where you have to go for long trade. So after that what happened? Price retraced, and then we can see there is a rally in the markets. This is the picture of the demand zone turns into a supply zone. How the demand zone is turning into a supply zone. Here we can see that there is a rally in the market and the price is moving up. And once the price touched the demand zone, we can see that there is a consolidation phase. Okay. So here after this demand zone is broken, we can see the prices moving up. Okay, so we are waiting for the retracement in the price. So once the price touched the demand zone, we will enter into the long trade, but we cannot see there is any retracement happening. If there is any green candle we can see above the demand zone, one can enter into the long trade. But what happens here? The demand zone turns into a supply zone, that is the support turns into a resistance zone. Here what happened? Again the price started into the consolidation phase, and once this demand zone, that is demand zone, is broken, we can see that this support becomes the resistance zone, that is a supply zone. So we can enter into the short trade once the price is breaking this supply zone. So here the price broke the supply zone, and after that we have to enter into the short trade only at the retracement, only at the pullback. So we can see after this price went and touched the supply zone again, and we can see there is a downfall, that is a fall in the market. Strength of supply and demand zone, that is how did the price leave the supply and the demand zone, that is how will be the strength of the move. What is the logic behind this? The stronger the price moves away from the zone, the more out of balance supply and demand are at that particular zone. A heavy order is placed by the smart money. So here this is the resistance zone, that is a supply zone. So price gap down from zone and strongly moving down. We can see very big candles, that is red candles moving from the resistance zone. So this is the strongest. And this is the strong, this is weak. Why this is strong? Means the price moving down with big candle with small retracement. The retracement candle, you can see this green candle is very small. So this is a strong downfall. This is weak. Why? Because the price moving down with not so much of the strength, because there is very less strength here, because this red candle is very small, and after that we can see there is a green candle, the red candle, again green candle. There is so many retracements happening. So this is a weak move. This is strongest because we cannot see any green candle in this fall. How to enter demand and supply using the price action? That is, we have to find the supply and demand zone in the higher time frame. In an hourly time frame, we find the zone. That is, in that case, big picture we can see. Okay, whether the trend is up or down, determine which side we want to be on. So in the hourly time frame, we have to find the supply and demand zone, and we will know the picture, that is the trend is upside or downside. Where are the big picture support and demand levels? Then we don't want to long below the supply zone. We always have to go short below the supply zone. In my next video, I will show you how to draw the supply and demand, that is how to draw the support and resistance for the Nifty and for the Bank Nifty. In my Telegram channel, I will be posting Nifty and Bank Nifty support and resistance zone on the daily basis, and you can use that chart for your daily trading. Please give your valuable comments in the comment section below, and do let me know what type of video you want next. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.